Good morning, all of you, on Blind Bankers of India's YouTube channel. Myself, Nishant from BBI admin team. And today we have with us Dr. Ashwini Agarwal, sir, on different topic to share his views and to teach us on economic reforms, advanced bank management, chapter 7. And the student role is going to play by Mr. Amit Pahuja. So welcome both of you on YouTube channel of Blind Bankers of India. So I request Ashwini sir to go ahead with his lecture.
Thank you, Nishanji. A very good morning and very welcome to all the viewers of Blind Bankers of India YouTube channel. And with us, we have Mr. Amit Pahuja, and he's with SBI, working as an officer. So he's going to play the role of a student. He has agreed for it. So you're welcome, Amit.
Welcome, Amit. Very good morning, sir.
Very good morning. How are you?
Doing great, sir. Thank you.
Great. So today we're going to discuss about chapter 7, that is focusing on economic reforms. In the previous chapter, we had discussed that like Indian economy was almost stagnant from 1900 to 1950. And from 1950 to 1980, it grew at a static rate of around 3.5%, which was called the Hindu growth rate. And from 1980 onwards, the reforms were made. The growth rate almost doubled from 3.5 to 6.2 to 7. And by the end of 2010, we were doing quite good with respect to economic reforms. So today we're going to primarily focus on economic reforms that took place from 1990 to 2009. So these 19 years growth rate, we're going to study how the whole thing happened and how the things improved thereafter.
Right, sir.
The transformation of our Indian economy started off in 1980 with the coming of IT technology, onsetting of the computers and opening up of the economy. A lot of things were happening, and this continued, this got a thrust in 1990s, and it got greater momentum in the year 2000 to 2009. What was the major transformation, Amit? That was that the share of services sector increased dramatically. Right. So it increased from, say, the share of services was much less than, 50% before 19. So it shot up to 2/3 of GDP's contribution. The contribution to GDP by the service sector has increased considerably, and that of the agriculture sector, which was nearly 38%, declined to 17%. So how this entire transformation took place, how everything happened very interestingly, that is all we're going to discuss in this transformation of Indian economy right from 1990 to 2009 while you are attending to the paper of CIB. These are the things which we have to understand. And so I start off from here on.
Right.
In what happened is how this transformation took place. So we start off here. What happened was the operations became more sophisticated as we opened up the economy in 1980s and 1990s, and the entire globalization of the economy took place. There was financial reforms and altogether integration of Indian economy with the international economy. So this happened because of two international factors and two internal factors. So that's very important. The first international factor that happened was collapse of USSR.
Okay.
Because of collapse of USSR and the Eastern Europe economy, they also collapsed. And they felt if we liberalize, the things will improve. And that's what they did. With the disintegration of USSR into Russia and a number of other countries, and Eastern Europe also, which was primarily Marxist communist countries, they opened up and they felt that they will improve. And that's what happened. Simultaneously, Amit, second thing which happened was the Chinese economy. It was totally in doldrums in 1960s, but it opened up. And as it opened up, it came out to be a great success. So most of the intellectuals across the world including in India, they started thinking up, if we have a closed economy, it doesn't grow. If we have an open economy, it grows. So
Right.
Amit, can you tell me the two international happenings that took place that brought this liberalization into existence?
So, sir, the first one was the disintegration of USR into various countries like Russia and few other countries, and also the disintegration of Eastern Europe that led to the open economy for India.
Absolutely. The thought that closed economy doesn't work, liberal economy works. So that was one factor. And what was the second factor?
Second factor was the Chinese economy. Like in 1960s, they had a closed economy, but gradually they opened up. So they felt that the closed economy doesn't work. So even the intellectual people felt that we should have an open economy.
That's what they started thinking in terms of India also. Let's try for that open economy. Okay. Two things happened within our country. First thing was the regional parties. They become very powerful. In the states, we found earlier, there was only a national party in the center that used to rule the states. But suddenly, we found that the regional parties became very strong in the states. Like Telugu Desam was there in Andhra, then Shiv Sena was there, and so on. Number of local parties you will find, they got strengthened and they opened up, and more federal structure of Indian economy came forward. And second thing which happened in the center was there was a starting of era of coalition government. Not one party was in total control of the central government. There were a coalition of number of parties. So they had to think in terms, more liberal terms, and they couldn't control a centrally controlled economy. So they had to liberalize. So what were the two internal factors that opened the Indian economy?
So, sir, the first one would be earlier there used to be only one national government, but gradually regional regional
Parties, they
government
came up.
parties came up and strengthened, like Shiv Sena in Maharashtra and few others.
Hmm.
And also the coalition of government, the coalition of parties started. Earlier there used to be only one government, so now they started forming various parties together.
Great. So these two things are very important, two external factors and two internal factors that they triggered the reform within the country, within our country, and the entire thought to open up and try for an open economy started off right from 1980s, and that it went off. Normally what happened, Amit, is when an economy grows, what happens is initially agriculture improves itself. It becomes capital intensive, machines are introduced, so people get surplus. When people get surplus, they open up and go into industry, and the industry picks up. Once the industry picks up, then the income goes up. When the income goes up, the disposable income is used for services. Then most of the developed countries, what you find is the ratio of contribution to GDP of agriculture is low, of industry is reasonable, and the major chunk is services sector.
Right.
But Indian economy happened to be a very unique. What had happened was that earlier, like agriculture was contributing literally nearly 40% of GDP. But in 1980s, when the IT sector came, and with the coming of IT sector, BPO, that is business process outsourcing. This is important for CIB. Maybe that BPO full form may be asked in the MCQs. Then there is a KPO, knowledge processing outsourcing. So knowledge KPO is also very important for the examination point of view. These two terms be very clear with you when you are appearing for the examination. Similarly, a lot of other terms I will be sharing which are very important while you are taking your examination for a CIB. So these two industries came. A lot of people came into software development. IT companies got up considerably. Their growth was tremendous. That was a fabulous growth that they had. With the result, Indian economy, the agriculture contribution shrinked from 38% to 17%. And services sector expanded from say 46, 47% to 63, 64%. Two-thirds of the GDP is now being contributed by the services sector.
Right.
So that is from underdeveloped stage, we straight away went to the developed stage,
Right.
right? So normally people from underdeveloped, they go to developing, from developing, they go to developed.
Right.
But Indian economy is a strange happening. Here, the share of the services sector has become 2/3 of the entire GDP, which is a sign of a developed economy. So that was a tremendous growth that we had in the services sector.
Right, sir.
One more thing, Amit, I will just share it with you. The moment in 1980s, when we opened up, so we eliminated license Raj. There was a total license Raj earlier, where for anything we want to produce, we need to have a license from the government.
Right.
So what do you think? If the license Raj goes, liberalization comes, so what will happen?
There will more people come up. There will be more. People will initiate more. More
Absolutely.
to. Yes.
Absolutely. This is exactly what happened. So when the license is gone, all those entrepreneurs, they found that they could do well, and they came up. A lot of new industries came up. So second thing, reforms which took place was overhauling of PSE, public sector enterprises. Earlier, public sector enterprises were taken for granted. Now they started introducing professionalism into the public sector enterprises. And what they happened was, they were asked to go into the capital market. So when the public sector enterprises had to go to the capital market, they had to sell their shares. When they have to sell their share prices started reflecting whether they are performing well or they are not performing. So they had to go towards profit orientation along with the service orientation. Right. So second thing which happened is overhauling of the public sector enterprises. So what happened by opening up public sector enterprises, Amit?
Sir, opening of public enterprise, it went to the capital market, eventually getting onto the profit making by their shares. So
exactly. Yeah. So when they went to the capital market, so they had to open up, they had to become transparent, and automatically people come to know that they are performing. So it became very important that they have to become professional. Right. So the professionalism started, professional management, professional technology. Another reform that took place was MRTP Act was taken away. MRTP is Monopolies and Restrictive Trade Practices Act. Before this liberalization era, if any company used to control the market with the larger share, they were restricted. They were not allowed to grow beyond a certain level. So automatically large-scale economic advantages that the company could have achieved were not there. So MRTP was taken away. Right. So what do you feel if monopolies and restrictive trade practices are taken away? What would happen?
So there will be more transparency, as in if that will be taken. So the industries which can do good or which have the capability to do good can enhance themselves and do well.
Exactly. This is what happened. You're absolutely right. The moment this monopolies restrictive practices were taken, there were a lot of amalgamations, coalitions, mergers. So the size of the company started growing considerably. Right. Another thing was there was an automation of foreign investment. Earlier, if foreign investment was to be brought in to India, there was a process that we need to get the permission from the government. The foreign companies had to now they had the state policies. Based on those policies, anybody across the world, they could invest in India. So it became automatic, no permission. So what do you feel when we open up the foreign investment? People can invest very openly into Indian economy. What will happen?
Eventually, sir, there will be growth. Eventually, there will be a growth in the economy.
Absolutely. What happened is we became a hub for foreign investment. Right. We became a major attraction for foreign investment. And suddenly foreign direct investment into India started increasing. And with the foreign investment, they brought new technology, latest technology. and our production quality dramatically improved considerably.
Right.
Okay. Another thing that happened was very important was rationalization of foreign tariff. Whatever the custom duties were there, more or less the custom duties were restricted to 10 to 15%. Earlier, they used to be 55%, 60%, 70%, even 100% custom duty used to be there for importing anything or for duties for exporting also. So these were reduced to 10 to 15%.
Right.
So if you reduce the custom duties for foreign trade from a large amount to a small fraction, what do you feel would happen?
So there will be more and more people coming forward, and eventually it will ease the trade.
Absolutely. And this is what happened. A lot of
Yes.
people started trading, people started exporting, people started importing. So we got integrated into the global economy.
Right.
So when you are opening up for the global economy, automatically we became a hub for production also. We started importing raw material. We became a very, very important importer of oil as well as various other raw material and started producing it and selling it across the country. Like we became a leaders in tool industry. A lot of things happened this way. So we improved continuously.
Right. Spices.
Spices were already there traditionally, but non-traditional things also
Things.
we like software export, computers export, lot of things, tools export, hand tools export. Micro and small enterprise contribution also dramatically improved.
Right. Sir.
So our share in international trade, which was just around 0.01% of the world trade, shot up to 1.1% of the world trade. 0.01% to 1.1%, almost nearly 100 times.
Right.
So there was a tremendous improvement in international trade, and we became a part of the global economy.
Right. Sir.
Another thing which was opened up all the restrictions which were imposed on industry regarding what they can produce or what all they can uh, bring technology, importing of capital goods, all this was opened up. Like they could import any technology, they could import any machine and put it into the country and help it get their production. So what will happen? If the import of technology is opened up, the getting of machines is opened up, what will happen to the economy as a whole?
So it will grow drastically.
So the foreign technology came. So when the foreign technology came, obviously we started getting the international quality of goods and services we started producing.
Right.
So we find that the goods within the country also improved considerably. So the old systems of manufacturing, they dramatically came down and new systems came into existence. There was total transformation, sophistication, and integration of manufacturing sector.
Right.
And our manufacturing became very competent, much more efficient, and much better. Now we look at the services sector. There was a boom in the IT. I shared with you that we started off IT in 1980s, opening up the economy for computers started pouring in, and the technology starting off. Those services sector got a tremendous boom with the coming of IT. Another thing which happened was foreign investment in telephone. Before 1980s, to get a telephone was a very, very big thing. But now if you see, even telephone and mobile is there with everybody and anybody.
Right.
I hope you agree with that.
Absolutely, sir.
So when you have the information technology and when you have the communication technology, information and communication technology together, so this opened up altogether a new avenue for the services sector, for the BPOs, for the KPOs, for a host of other activities that could be introduced. So the services sector got a tremendous boom. It grew at a very fast rate, one of the fastest rates that we could. And another thing we had was we had good young people who could speak English very well. And our wage structure was comparatively much less costly vis-a-vis the Western world. So all this made us an important hub for the growth of Indian services sector. And our contribution, the the contribution of services sectors in the Indian GDP, it increased considerably, and it is now around 2/3 of the GDP.
Right.
And 1/3 is being contributed by agriculture and
Agriculture.
industry.
Right.
And if we look at the industry before reforms, it was contributing around 20% to GDP. And after reforms, there has been tremendous growth in the Indian economy. That means accordingly, the industry has also grown, but its contribution has declined marginally to 19%.
Right.
So it's more or less stable from 20% to it has declined to 19%, more or less stable all through, which is unique for Indian economy. Otherwise, it so happens that agriculture declines, industry goes up, then industry declines, services go up. But we have skipped that stage. We have certainly found that agriculture has declined, agriculture contributed decline, and services sector has
boosted.
It has gone up. So it's a unique thing about Indian economy.
Right, sir.
So you got what is so unique about Indian economy?
So generally, what we have seen is, if we talk about developed countries, or generally what happens is, agriculture declines, and services industry decline, and the service sector grows. But in India, it was unique. The agriculture declined and industry more or less remains the same, but the service sector grew drastically from around 40 somewhere around 43-44% to around 60%. That contributed 2/3 of the GDP.
Great. Now let me talk about agriculture reforms. We had last chapter, we had studied that there was a green revolution in 1960s, and agriculture production of food from a dependent economy in food, we became independent, and our storage capacity also increased considerably. So we need not import agriculture. So this green revolution was definitely there. Then there's a cash crops which were being encouraged. Lot cash crops be there. So their agriculture reforms were also made during this period in 1990s. What was there? The companies were allowed to buy directly from the farmers, and agriculture produce was now allowed to move from one state to another, one district to another freely. Right. And third thing which happened was the Essential Commodities Act was of 1955 was taken away. So three things happened which gave a thrust to agriculture.
Right.
I repeat, could you get it? Can you repeat it? Or
yes, sir. The parties were directly the parties were allowed to directly get the produce from the farmers.
Correct.
And the movement of produce started from interstate or inter-district freely. And the third thing was the Essential Commodity Act was taken away. Yes.
So these three reforms, so automatically agriculture became more commercial. The income level of the farmers started increasing. Agriculture produce became more professionals, and agriculture market also developed. Forward trading was possible, and a lot of these things happened with the result that economic reforms in agriculture was also visible. Right. So next we look at the foreign exchange. Earlier, before 1980s, the foreign exchange prices were determined by the RBI. After 80s and 90s, it was opened up, and now market determines the price of rupee vis-a-vis dollar through demand and supply. All the hawala and the non-economic activities which were there, they stopped, and it became more transparent. With the result, lot of foreign exchange inflow into country took place, and rupee became very, very stable.
Right. Sir.
So you could understand what happened in the foreign exchange?
Yes, sir. So before 80s, so the foreign exchange rates were determined by the RBI. But after that, it started the market started to determine the foreign exchange rate based on demand and supply, which led to the transparency.
Great. Another thing which happened, I'm now talking about the disposable income. So when the income started increasing, obviously I told you before 1980s, we had a Hindu growth rate of 3.5%. And even if we go back, way back 1900 to 1950, there was literally no growth. We were almost stagnant. After 80s, our income, GDP started growing fast, per capita income also increased, population growth reduced. With the result, there was an increase in the disposable income. When there was an increase in the disposable income, the demand for milk, the demand for poultry products, and the demand for high protein food increased. With the result, in allied activities, their growth was tremendous. And they now contribute 3/4 of the entire primary production. So
Right.
what can you say about disposable income?
So after 1980s, as the disposable income
Increased.
increased, so it led to the increase in the demand for milk and other poultry products. So eventually the
Allied activities,
increased and contributed 2/3 of the
entire primary production.
Correct.
Great. So food production is 1/3, and non-food production, that is allied, milk and poultry and other, the contribution in the agriculture is 2/3. So you can understand the high protein food has increased in our country. This is a next. I'm going to talk about transformation in financial sector, which is very important for us, right? So 3 committees were there. 2 were in 1992. There was a Narasimhan committee. Then there was another Narasimhan committee in 1998, which brought about bank reforms. And there was a Khan committee, SH Khan working group, which talked about harmonizing. So what the government did was, in 1992 and 1998, they introduced the concept of NPA, non-performing assets. So because of non-performing assets, because the funds were not being returned, the banking industry was going down. So 2 things happened through the recommendation of Narasimhan committee. First thing was private banks were introduced. And if you look at them, whether it was ICICI, whether it is HDFC, whether it's Axis Bank, most of these banks were triggered by the government, because ICICI was also a government corporate and HDFC was also a government corporate, and Axis, that's IDBI, was also a government corporate. So they introduced in the private structure, the public sector was introduced in the private sector. So automatically private banks were introduced, and they were given to the economy so that they can compete with the public sector enterprises. And public sector banks were given large amount of capital. Lot of capital was inducted by the government of India into the public sector banks, so that public sector banks also become strong. On the one hand, they strengthened the private sector. On the other hand, they strengthened the government sector, and they told both of them to compete.
Right.
So what happened in the banking industry in 1990s, Amir?
So on the recommendation of these
Narasimhan committee,
so NPA was introduced, as in
NPA concept was introduced. Yeah.
Yes. So big banks were going down, funds were not coming back. So they triggered private sector. They triggered private sector banks, and also they gave a large amount of capital to the public sector banks and asked them to compete, so that the economy can sustain.
Absolutely. And you know what happened? See, this private sector brought new technology and public sector followed them.
Right.
This private sector had new strategies which public sector followed. Okay, public sector had a very good network. They were holding nearly 96% of the banking system. So the private sector started copying how they have the network, how they learn, and a lot of talent from the public sector was inducted into the private sector. So the private sector grows. So all in all, the banking industry became much, much stronger. And you will happy to learn, in 1990s, the NPA level was somewhere around 8%. It dropped down to 1% by the year 2008. So that healthy banking industry became from 1990 to 2008.
Right.
So lot of apprehensions are there that this government has promoted private sector bank. If you really look at it, it is a beautifully driven economic reform system which was there, which was conducted so that both the sectors grow and the customers are benefited considerably.
Right.
Then came this Khan committee. It focused on harmonizing this thing. That means the role of each financial institution was well defined. In the economy, both the private sector has a role to play and the public sector has a role to play. And both can be complemented. They need not be contradictory. They can be a very complementary role that they can play. That's how this committee recommended. And that's how the government put forward the banking industry to grow all through.
Right.
There's a concept called price discovery. So banking industry started working on price discovery. Earlier, RBI used to tell for loan, these charges be there. For savings bank, this should be the rate of interest. For this loan, this should be the rate of interest. Now, slowly and gradually, RBI took away all the controls and it liberalized. It allowed the bank to decide themselves. And there was a called price discovery mechanism. Because of the competition with the demand and the supply and the focusing on the opportunity cost, banks started calculating the opportunity cost. And thereby, they started calculating what charges should be taken, what rate of interest should be taken by the banking industry, and they were competing all through. Right. And you know what happened? The cost of intermediation declined from 6.4% to 3.4%. That means, like, the funds we are acquiring from the public, there is a cost of funds, and the funds we are, as a banking industry, we are giving to the industry. So there is an income from the fund, and the cost of maintaining these two, the difference between these two has declined from 6.4 to 3.4%. So the result is we have become more efficient. Depositors have gained as well as the borrowers have gained, and the economy as a whole has gained.
Right.
You could understand it?
Yes, sir.
With the price discovery mechanism, the entire banking industry, the economy, and everybody got benefited. Right?
Right.
Another transformation that took place was regarding, there was a money market reforms which were there. Money market is like overnight money banks need, short-term money they need, funds, all these were there. So this short-term money market, this was also liberalized. This is called call money market. Right. And new instruments were introduced in this call money market. These instruments like commercial papers, certificate of deposit, then interbank lending was also introduced, and it was screen-based lending. Like one bank has a surplus fund, it will offer at such a rate on the screen itself. You need not go to the market, find it out. Now, sitting at the center itself, you could get call money as well as hand over call money. So the entire derivative systems were introduced. With the result, the efficiency of call money market considerably improved, and the cost of call money market came down, and the call money market became more stable. So you could understand what happened in call money market.
Yes, sir. The new instruments were introduced like certificate of deposits, interbank lending, and commercial papers. So that eased the call market to function efficiently.
Exactly. This is what happened all through. So the cost of overnight lending dramatically came down. It became more stable.
Yes.
And the volume also increased considerably. So I will just give you, it was somewhere around 2 lakh crores, and it increased to 54 lakh crores. So you can very well understand what sort of dramatical changes that took place in this. Another thing was, like earlier, state used to borrow from the Reserve Bank of India. And there was no competition. Now a new instrument was introduced, which is called ways and means advances. Okay. Ways and means advances. So through ways and means advances, now the state could borrow. and the state had to borrow through GSEC, government securities. And government securities business, which was there for the banking industry, it started increasing considerably. Earlier, it was a very controlled government securities market. Now the government has opened up. The government security prices are now being determined in the demand and supply. Earlier, what was forced by the government to hold these many government securities, that was the situation. Now what you find is banks are holding more than the required norms. That
Right.
means earlier they were forced, now they are holding on their
Own.
own.
Yes.
So that is the big advantage with the opening of economy, with the liberalization of the economy that we increase. So the entire market-based system of economy was continuously strengthened. And as I shared with you that foreign exchange was also opened up. So there were certain more things which took place. In balance of payment, there are two things. One is capital and second is current account. So whatever borrowings and lendings are there, they go into the capital.
Right.
And whatever is like buying, like transferring of funds is through current.
Current account.
If somebody sends and receives funds, that is current. So capital aspect was totally liberalized.
Okay.
So with the result, our economy became very effective with respect to international trade, which I've already discussed with you. And similarly, for foreign investment hub also, it increased. And their new instruments like hedging was also introduced. And the market determined prices, exchange rates also helped in boosting our foreign exchange reserves. Our foreign exchange reserves started strengthening. Never had we had, like in 1990s, it was just $2 billion. And slowly and gradually, the contribution to foreign exchange continuously increased, and we got around $300 billion of reserves with us, which became very healthy for us.
Yes.
And now we'll talk about transformation in capital market. Earlier, the shares were in hard form. Now they are in the
Digital.
demat form.
Yes.
Earlier, the trading was in the open market. Now it is screen-based trading. So with the introduction of Securities and Exchange Board of India, we have a screen-based trading.
Right,
now
sir.
we also have options and futures, which was not there earlier. So all in all, our capital market is internationally competitive now. It has the state-of-the-art technology. It has the best infrastructure that is available across the world. And it's pretty efficient, though the market has a scope to improve further on. But as far as technology is concerned, we have the latest technology, and we have to continuously see that this capital market further strengthens. So what are the changes you found in the capital market taking place? What are the reforms?
So firstly, the shares were earlier, the share used to be in the physical form. Now they digitalized and became demat, and which we became more competent in the international level as well. And then
Screen-based.
yes, so there was a new instrument was introduced.
Futures and options.
Options, yes. There was no, earlier there was simple trade. Now there were future and options. So we became more competent in the international market as well.
And as far as the infrastructure is concerned of capital market, what do you feel?
Yes, sir. We did exceedingly well. Means we could do exceedingly well in.
So we have got the latest technology as far as the capital market screen-based trading is concerned. It is all competitive, best in the world.
Yes.
Okay, now I'm going to transformation in the credit market. So risk management has improved. We have Basel introduced into our banking system. Basel norms have been introduced, and transparency is there. Market discipline has increased. Supervisory controls have increased. We have risk-based models, and the risk management of the entire credit management has improved. NPA management has improved, and all in all, the systems to monitor the credit portfolio of the banks has improved. So what are the reforms in the credit sector which have come forward?
Sir, NPA management was
It has improved.
improved drastically, and then market discipline and supervisory control, and then there was like
Monitoring, credit monitoring is much better, it's
much
more
better.
organized. We got risk management models have been introduced.
Right.
So all in all, the credit, which is the backbone of Indian banking industry and the financial sector, that has considerably improved.
Right.
And I has already shared the intermediate cost, which was earlier 6.4%, it has dropped to 3.4%. So that
Correct.
itself reflects the strength of the systems which has taken place.
Right.
Now I'm going to talk about transformation in payment systems. From 1990s to 2010, what we found is there is a tremendous improvement in the payment system. We have now CTS, that is check truncation system, which was introduced in 2003.
Right.
We have NEFT. NEFT full form we must know.
Yes, sir.
You have an idea?
Yes, sir. National Electronic Fund Transfer.
Exactly. So this is very important for your examination. When you go for CIB, you should know the full form of NEFT. Then another is RTGS.
Real-time gross settlement.
Exactly. So NEFT is in batches, whereas RTGS is in instant.
Yes.
Real time. So this is, then we had a speed clearing system that has been introduced. And, if you go in 1990s, the number of ATMs were very, very less. Now, the number of ATMs have increased. You can find ATMs all across. Earlier 90s, in 80s and 90s, people were not ready to use ATM. They were not ready to take the ATM cards. Nowadays, what has happened? If you don't give the ATM card, they will run after you. They will see to it that you provide them with the ATM card.
Absolutely.
So the entire transformation has taken place as regards the usage of payment system is there. Then the concept of ECS, now NACH.
NACH, yes.
You heard about it? ECS?
Yes, sir. Yes, sir.
ECS is?
Electronic Clearing System.
Exactly. And there's a NACH, National
Automated Clearinghouse.
Exactly. So this is the great developments which have taken place as the payment is concerned. Earlier, we used to have the draft and all. The cost has come down. Making a draft was very expensive. Now, if you do RTGS, NEFT, the cost of transferring fund is almost negligible.
Negligible, right.
Right. So this is a major transformation in payment and settlement system that we had.
Right.
So we have find that how the Indian economy, trade, improvement, all these things are taking place. So I have shared with you how the Indian economy has transformed in various sectors, right? From agriculture to industry, to banking, to finances, to everything and almost every sector. So do you think we need to become complacent?
No, sir. There is no chance for complacency.
Amit, this is a very, very important thing in CIBA paper you must understand is what are the areas we are lagging behind. If we look, number one is poverty.
Right.
Only 9% of the people below poverty line has reduced with such a big improvement in performance. Like our economy has done so well, but very large number of people in India are still very poor. Right. People below poverty line is a very, very large number. And one of the statistics showed the average expenditure, the number of people whose average expenditure per day is less than 20 rupees is nearly 30%. That means 30% of Indian population as on 2009 was spending less than 20 rupees per day. You can understand the sort of poverty that is there in our country.
Right, sir.
So there's a long way to see that all these reforms, all these improvements, they percolate down.
Right.
That is very, very important. Okay. Second thing is income distribution. With from 1990s, when the Gini index is what exactly is, there is a 45-degree line, and there is a curve that we draw. As the income increases, the share in the national GDP, how it is shown. So larger the number, greater is the difference between the rich and the poor. Lower the number, the lower number means discrepancy is less, more equal distribution.
Right.
Our Gini code index, it has increased from 32 to 36.
So that means the
Difference between the rich and the poor has
widened.
Poor have become richer, no doubt about it, but richer have become much more richer.
Right.
So we have to see that this income distribution is made more and more equitable, and people in the lower categories are picked up. As they improve, that would be very, very important. Next, third thing. First, I talked about poverty. Second is income distribution.
Right.
Third, I'm going to talk about is Human Development Index. See, as far as Human Development Index is concerned, we stand 132 out of 170 countries.
Right.
Very low.
Yes.
So as far as the human development is concerned, we have to go a very, very long way. A lot of countries have even, improved much faster than us. So we have improved with all the reforms that we have done. Still, a lot of needs to be done, especially with respect to Human Development Index. Another area, health. Average expenditure on health in our country is 1/2 of what Sri Lanka spends. Many of the underdeveloped countries, they are spending more on health vis-a-vis our country. Our basic infrastructure of health is in a very tough situation.
Right.
Vis-a-vis world, our health infrastructure needs to be improved a lot. So our investment in GDP, hardly 1 to 1.5% we are spending on health. Whereas I will tell you, most of the countries, they are spending 6 to 7% of their GDP on health.
Okay.
So this is a very important area that we need to look into. Because health is very, very important for any economy.
Right.
So a reform in health is altogether missing. That needs to be taken care.
Right.
Next is education. There was a survey conducted in the year 2009, and they found 50% of the students in class 3 couldn't read alphabets.
Oh.
And the education system, in education infrastructure, lot remains to be done. We are spending just 1 to 1.5% of our GDP on education, whereas the world is spending around 15% of their GDP on education.
Huge gap.
Huge gap.
Yes.
And the sort of education that we are imparting, most of the people are non-employable also. Their skills have not developed, their education level has not developed. A lot needs to be done as far as reforms in education is concerned.
Right.
So these 5 areas of reforms are still pending, which we need to look into.
Right, sir.
So this marks the end of this chapter. So we'll do a quick revision. Ready for it?
Yes, sir.
Okay. So we are going to talk chapter 7, that is on the economic reforms. In economic reforms, what can you say about contribution of services sector and agriculture sector to GDP?
Sir, Indian economy has been unique. It more or less became after 1980s. It more or less shows the growth of a developed country, where the agricultural growth reduced from somewhere around 38% to 17%, and
services has increased from
around 45 to 64%. That is the almost 2/3 of the.
So this is a very important question for your CIP, right? Okay. When we go for agriculture, we have said that the ratio has increased, right? So anything which has opened up in agriculture, what are the things which have opened up in agriculture?
So there were three things that opened up. First, the parties could directly take the produce from the farmers. Second, then there was free trade between interstate and inter-districts. And there was Essential Commodity Act that was taken away from, which was introduced in 1955.
Correct. So India went through this liberal reforms because of two international events. So what are these two international events?
So first one was the disintegration of USSR into various countries like Russia and others, and the Chinese economy, the growing up of Chinese economy.
Obviously, the disintegration of USSR was because it was a closed economy, and
Yes.
it came to know that they need to liberalize, then only they can sustain. Similarly, the Chinese economy, as long as it was a controlled one, so they thought of opening it up, and the moment they opened it up, they started growing fast. So
Right.
with the result, Indian intellectual, they started thinking, I think by keeping
we
our
should-
economy closed, we are also, retarding the growth.
Right.
So we have to open up. Okay.
Right.
Within the country, two things happened. What was that promoted liberalization?
The first one was
Regional parties.
Yes, earlier there used to be only one national party. Then the regional parties strengthened up, like Shiv Sena and few others. And second one was the coalition. Earlier there used to be only one party. Now there used to be various coalitions and making different parties.
Actually, now the government was a coalition party, which is the era of coalition, right from 1990s. The Congress had a coalition, then Janata Party had a coalition, then Bharatiya Janata Party had a coalition. Those laws all through a coalition parties.
Right.
Okay. Public sector enterprises. What happened? What did the government do with the public sector enterprises during this reform process?
So the overhauling of it was the public sector. It was directly entered into markets, which which led to the transparency.
Absolutely. So their shares were opened up into the market.
That's it.
NTPC, NHPC, BHEL, all the public sector shares, they were available in ONGC. All these shares were now available in the market, and the market was showing how they are performing. So they had to become profit oriented and contributors.
Right.
Then what is the full form of MRTP Act, which was taken away? MRTP.
Some monopoly restricted
and trade practices. Great. Okay. So continuously there was improvement in the foreign exchange market also. Okay. As far as the industry was concerned, so when the license Raj was taken away, what happened?
So there were more and more entrepreneurs that came forward and who thought that they could do well. They started contributing to the economy, and they started opening up new industries, and even the foreign trade were liberalized, so they could get investments from wherever from the world.
Great. Okay. What triggered the services sector in 1980s and 1990s? What happened that promoted service sector and brought in BPOs and KPOs?
So there were technological advancement in the IT sector and the communication sector, the telephone lines and all of and there were people with expertise. People could speak English well, so that led to the
Right. So two things are very important, which you must remember for your examination. Number one is opening of IT industry. That means IT industry came in, computers came in. Second is the communication industry, as you said, absolutely right. So these two things are very important when you are looking at the Indian economy reforms with respect to services sector. That's a very, very important. Okay. So we had talked about the agriculture sector. You have already shared about that. Okay. Foreign exchange liberalization was there, right? And with the foreign exchange liberalization, what can you say about the foreign exchange reserves?
So that even increased since it was liberalized. The reserves increased drastically. Earlier, it used to be somewhere around
$2 billion,
$2
$2 billion,
$2
and
billion
they got up to $300 billion.
Right.
Great. When the disposable income increased, what happened to the allied agriculture?
Even allied agriculture increased. There was a demand for uh, milk and other poultry products, and it became the 2/3 of the whole agriculture produce.
Oh, great. So another thing which you need to understand is transformation in financial sector. So there was two Narsimhan committee recommendations. So Narsimhan committee recommendations, what exactly two major things happened for the banking industry?
Yes, sir. First, introduction of NPA. So
Right, the concept of NPA, concept of NPA, so that closely monitor can be done. Great.
Yes.
And what was the second thing?
The harmonizing the.
Actually, they opened up private banking.
Private banking. Yes.
They opened up private banking, and they told the public sector banks with the induction of capital to compete with the private sector.
Okay. Correct.
So these two, so that they become healthy. Because public sector banks were having no competition. It was literally a monopoly of the public sector banks.
Right.
So they thought that Narsimhan committee recommended that there should be some competition, so that a healthy competition should be there. So both became stronger. So this happened and both became much stronger and much better off. That's great.
Right.
Okay, what can you say about payment methods?
So there were
have the payment methods in banking industry improved?
Absolutely, sir. There were introduction of CTS, that is check truncation system, NEFT, RTGS, ECS, NACH. All these things were introduced, and that led to the boost in the payment and settlement system.
Great. What can you talk about the capital market? Did the capital market improve? It's working.
Yes, sir. Even the capital market improved drastically. There was new introduction of
dematerialization.
Yes, digitalization of shares. Earlier they used to be physically. So yeah, and even the screen-based trade started taking place. So we could we became more competent with the rest of the world.
Great. So what about call money market, which became screen based? Did it help in the growth of government securities market?
Yes, sir, it did. So there was introduction of new instruments like call money, commercial paper, and certificate of deposits. So that helped the government. That helped
the economy to grow at a faster rate. Definitely. Right. Okay. So a lot of things are happening for the transformation. So I think you have grasped the things very well. You have asked about the capital market. Okay. Last thing I'm to ask is, should we be happy what all has happened? Are there any reforms? What are the areas for reforms? Especially if we look at the poverty sector.
Yes, sir, definitely. There's no chance of complacency. There are still we have reformed, but still there's a long way to go. So in terms of poverty, there are around 30% of the Indian population in 2009 where their expenditure was just meager 20 rupees a day.
So a lot of things need to be improved upon. Secondly, what can you say about income distribution? Is the income distribution equitable, or it has become inequitable from 1990 to 2010?
So it has become inequitable. The gap has widened. So
the Gini index.
Yes. So
it has declined from 32 to 36.
Yes. So no doubt that the poor is becoming richer, but the rich is becoming richer at a very large level.
Great. So you have understood this aspect also. Second thing I'm going to ask is, what about Human Development Index, where we are just 132 out of 170 countries?
Yes. So there's a long way to go. So if we talk about human development of human, so there's a long way to go.
Or as regards the health expenditure per capita?
Yes, so that also there's a long way to go. If we talk about contribution of health infrastructure in our economy, that is just 1.5%, whereas if we talk about world, it's somewhere around 7%.
Great. So what can you say about the education quality of our country, the expenditure that we are doing in education?
Though it has improved, but still there's a long way to go. So we are contributing in the education sector somewhere around 1 to 1.5%. But if I talk about the world contribution, that is huge, around 15%.
Great. So we have these 5 areas of reforms. We have done a lot of reforms. We have improved our economy, and I'm sure you have enjoyed the session today, Amit.
Absolutely, sir. Thank you for giving this opportunity. I
Great,
enjoyed
great.
thoroughly.
So yeah, most and more people join us for Blind Bankers of India, this YouTube channel, and make benefit of it. It would be really wonderful, and people share the links. That would be great, right, Amit?
Right, sir. Thank you so much
So,
for having me
thank
here.
you, and thanks to the Blind Bankers of India team who gave me the opportunity to share this chapter 7 of CIB first paper, so mandatory. It's a very interesting chapter, friends. Thanks a lot for giving your time, and I also thank Mr. Nishant and Anamika and all those who have helped to make this program possible. Thanks. I just hand over to Nishantji.
Thank you, sir, for your valuable time and suggestions, and your lecture delivering is awesome. Thank you, Amit ji, to be a student first time. Please share your experience of the line when we will join together. And thank you all the viewers to join with us on YouTube. Please like the video, share the video, and subscribe the channel. Thank you. Stay safe.